All right. Well, as South Africans continue to feel the impact of high inflation and a growing economic pressures, a survey from credit scoring company TransUnion shows that 67% of respondents had reduced spending on extras such as dining out, travel and entertainment in the past 3 months. This is in order to make room for more important payments in their monthly budget. For more insights on how this is all going to work, we're joined by Weihan Sun, Director at Financial Services Research and Consulting Unit at TransUnion. Weihan, thank you very much for your time. Let's quickly deal with just how indebted South Africans are based on your research.
Thank you, Tony, and thanks for having me. Well, South African consumers in general are quite heavily indebted overall, and the challenge from the COVID-19 pandemic continues to plague many consumers in South Africa. But the interest rate inflation continuing to rise, as you pointed out earlier, the cost of credit is becoming more expensive. And as a result, that pushes consumers further into debt. To provide some context just based on the interest rate, in the 2022 year, the interest rate rose by six times consecutively. And if you include the November 2021 increase of 25 basis points, that brings the total since November 2021 to the end of 2022 year of 350 basis points. Now, what does that mean? What that means is if you have a home loan of R1 million, at the beginning of 2022, your home loan was, let's say, R1,000. Because of the 6 consecutive increases in interest rates, at the end of the 2022 year, your monthly repayment would have increased by 2,500. And that's a significant impact on consumer wallets. And as you pointed out earlier, in this year that we're moving into in 2023, there's going to be likely continued increases on the interest rate, and that's going to further play consumers into further debt.
Yeah. Continue.
So to combat that, right, generally speaking, when household incomes improve, consumers have a higher disposable income in order to service this debt. However, the increases in household income isn't that great for the past few quarters. We're still seeing about 36% of households reporting an increase. Now, this is much better than what it was in the 2020 COVID pandemic period. However, you're looking at below 50%. So 1 in 3 households have said they increased their household income. Now, where's that increase of household income going to? Not necessarily servicing debt, because the other factors you pointed out probably was the increase in inflation. So that means the cost of basic necessities has increased significantly. If you're looking at just from a transportation point of view, diesel increased about 40% year on year, and with petrol in the inland region increasing 70%. The cost of fuel increasing generally results in the cost of food increasing as a result. So consumers are prioritizing that increase or slight increase in household income to basic necessities. And therefore, as a result, consumers are feeling more strain regarding the current debt obligations, with 1/3 of consumers stating their inability to service their debt in full for the current period.
All right. Well, that talks to prioritization, Weihan. We have said, as mentioned earlier, that they are cutting back on discretionary spending. You are the people that look closely as to what people are doing in their daily lives. This talks to the issue of discipline. How disciplined do you think we are as South Africans in making sure that we indeed prioritize the payments that simply cannot be missed?
Yeah, I think South Africans in general have, since the COVID pandemic, which has introduced a lot of payment shock into the system, have become more disciplined in terms of servicing debt. In fact, in our survey, we identified that 37% of consumers are actively trying to pay their debt down faster, whether that's delving into savings or borrowing money from friends or family in order to do so. These are the actions that consumers are actually exercising. Now, the issue with that is obviously the prolonged period of doing this. It's not sustainable. However, what we've seen is that South Africans are actually resilient. If you think about what's in our control, and that's very important, right? So the macroeconomic factors as a result of conflicts abroad have all impacted us financially from the cost of goods rising. Yet South Africans are still prioritizing to some degree in terms of servicing the debt. So there is discipline in the system. The issue, I believe, really in the South African market is financial literacy. I think that is the knowledge gap in terms of financial literacy is quite significant. Although consumers are financially aware that they have obligations, the way in which they approach credit and the way in which they apply for products could be better improved if they have higher levels of financial literacy.
Yeah, and people, when you start realizing that, my goodness, I'm not going to be able to meet my bond commitments this month, we coil back instead of approaching the financial institutions, which talks exactly to what you are saying about financial literacy. What would the advice be then to people as we start to feel the pinch, all of us? What do we need to do in order to not default?
There are a couple of things we can do from a improving your financial position point of view. And one of the things is you as a consumer are empowered in this industry to ask questions. We have we're an emerging market, but our banking and lending infrastructure systems are one of the best in the world, which means employees of banks and institutions are phase accredited. They are trained to answer financial questions. Therefore, as a consumer, you're actually empowered to ask as many questions as you can. If you're struggling to make repayments, the lender will be open to any types of consumers phoning them in asking for a repayment structure. Structuring in a way that is affordable to you, because to the lenders, you're a customer that's actually willing to take action on your financial situation. And they're obviously going to be obligated to actually want to help you out in order to retain you as a customer for the longer term, what they call lifetime value. Also, we do have a national credit regulator and enforces lenders to take more proactive action in terms of how they assist consumers. The other thing we need to factor in from a financial literacy point of view for consumers in general in South Africa is how important your credit score is. And there are a couple of things in terms of how credit scores are calculated, but the number one priority in terms of calculating your credit score is weighted towards how you have repaid your debt. If you have repaid your debt consistently, that's always going to be a good factor in improving your credit score. So as a priority, consumers should continue to focus, as they've indicated in the survey, that they are prioritizing repayment. Repayment should be top of mind. And the second thing is, if you do struggle, pick up the phone and call your lender. Ask for a different repayment structure, given the perspective that you are struggling at the moment. But if you're a consumer who's never struggled before and you're struggling for the first time, the banks and the lenders are open are all ears in terms of how to assist you in terms of managing and structuring the debt correctly.
Yeah.
The other thing is obviously the onus of spending, right? So that is within every consumer's control, is to limit maybe the luxury of spending or the discretionary spending that you can maybe dial back on in terms of managing your finances. And we've seen that obviously occur in terms of the survey, but we are talking about the Q4 survey results, and in Q4, holiday spending does get in the way, and that generally leads into the January window. So consumers at the beginning of the year, you are going to plan for the rest of the year. Take some initiative and get your finances in order. The one thing that you can do in terms of really understanding the level of debt you're in is to get your credit report. TransUnion, along with all the bureaus in South Africa, provide a free credit report to all consumers in the market every single year. And I think that's a great starting point just to assess where you are financially in terms of all your debts. But also, the credit report does give you an indicator which shows you accounts that are being opened under your name. If you're not aware of them, that means fraud has occurred on your account. Somebody has taken your identity and opened an account and is penalizing you from a credit score point of view. That's also the other benefit of getting this credit report. But I think these are the steps consumers can take in terms of mitigating that risk of the unforeseen circumstances waiting ahead of us for the year. But while we're at the beginning of the year, they should take the initiative and take action on this front.
Yeah. Final question, Weihan. For consumers who are heavily indebted, and that means that there's just no way to get around this, what are the options that are there for people like that? But in the same token, what are the consequences for reckless lenders? You've spoken about the consecutive times that interest rates have gone up, 6 times, as you said. Well, that would have been almost the same time that these interest rates went down at the height of the COVID pandemic, and that's when we all thought, my goodness, I have lots of credit, but that was actually reckless lending. Are there living examples of how reckless lenders have been punished?
So that's a great question. I mean, like I pointed out earlier, although we're in an emerging market, our credit system and lending system is one of the best in the world. And we do have a national credit regulator that enforces punishment on reckless lending. I don't believe there's any in recent times worth noting that any reckless lending has occurred at mass scale, but there are corrective regulations that are put in place to enforce that no reckless lending will be taking place in our market. Now, regarding your question regarding what consumers can do if they're really heavily indebted and no other options, debt counseling is definitely something that they can seek in terms of assisting where to go if consumers are lost and don't know what to do. Okay. The other thing is, like we pointed out earlier, the action at the end of the day remains on the onus of the consumer to take action, because the person that's going to get them out of the grant is themselves. The information regarding how debt should be structured and paid are all available, and consumers should pursue self-education, but as well as any financial assistance from the likes of debt counseling or debt counselors.
Weihan, let me thank you very much for your time. Director at the Financial Services and Research Unit at TransUnion.